Stop donating to futures prop firms. This video covers 45 slides detailing why smart money has moved to funded options, using the same charts and levels, but without the traps. Read on before the discount window closes. The harsh reality that nobody posts is that most funded futures accounts die before the first payout ever hits. The evaluation is the product, and the reset fee is the business model. Payouts are rare exceptions. You know this story because you've lived it. Day 1 is discipline, but by day 15, one single sweep can breach your account, wiping out weeks of hard work. The problem isn't your read, it's the structure. Here is the math they don't put on the flyer. 5 micro contracts expose you to $10 per point. A standard 200-point NQ sweep equals a $2,000 loss, which is the entire trailing drawdown for most 50K evaluations. Act 1. Why your futures accounts keep dying. It is not a skill issue, it is a structural one. The trailing drawdown is a noose. It chases your peak balance, meaning every winning trade raises the floor underneath you and tightens the rope. You are never truly safe, as the rule is engineered for your breach. Consider this illustrative scenario. You are up $1,350, but because the trailing floor moved up to $51,400, your account is dead. You are profitable, but you've been breached. Know your blast radius. How many NQ points kill a $2,000 trailing drawdown? With 5 micros, a single liquidity sweep before lunch is all it takes to end your funded account. Size up, and the runway disappears. The same position size that makes passing an evaluation seem fast is the exact same size that makes your funded account disposable. Futures props force you flat by the market close, often cutting your trades off before your thesis can complete. Options funding allows you to hold overnight and swing the weekly, respecting higher timeframe moves. The system is a maze, designed for you to fail and blame yourself. Rules like daily loss limits, news blackouts, and contract caps are framed as risk management, but they serve to expire your account before payday. You are not their trader. You are their subscription. In 6 months, you may have spent nearly $1,000 on fees while your payout counter remains at 0. Their reset button is the actual product. This is the loop that pays their bills: loss, tilt, size up, breach, reset fee, and a new evaluation. This is a predictable human response to open-ended risk. The only way out is changing the structure. Undefined risk equals undefined emotions. When the downside is open-ended, your brain cannot stay calm. By fixing the structure to include a hard, pre-accepted max loss, the calm you've been faking finally becomes real. Act 2. It's the same chart. Whether you are trading NQ or NDX, the index, the sweeps, and the levels remain identical. Only the ticket changes. When switching vehicles, your methodology remains untouched. Your liquidity sweeps, fair value gaps, session timings, and entry models all transfer one-to-one. You continue to mark the levels and take the trades exactly as you always have. You can identify displacement and mark the draw with precision, but if the vehicle keeps executing you, your edge is effectively nullified. Change the vehicle to preserve that edge. Why choose options? Because risk is defined by construction, not by promise. With a long option, your maximum loss is fixed at the premium before you ever enter, and there are no margin calls or trailing nooses to worry about. Compare the scenarios. When a trade goes against you, the futures contract continues to accrue losses linearly, while the long option hits a hard floor at your initial premium. One is a manageable risk, the other is a potential account killer. This is the power of convexity. Futures punish and pay at the same rate, but long options provide an asymmetric profile, flattening your downside when you're wrong and accelerating your potential gains when you're right. Psychology is simplified when you know your maximum loss before entry. This allows you to stay calm during the trade and gives your winning positions the room they need to actually perform. The deal is simple. You trade using the firm's capital for a small fee. You keep your profits split, and that initial fee is refunded once you reach performance goals. It's the standard funding model, just without the hidden landmines. Act 3. Built for options traders. We have designed a platform specifically to support the way you trade, ensuring the infrastructure works for you rather than against your strategies. Stop letting a clock manage your trades. Options funding allows you to hold through the overnight session. If your thesis requires time to resolve, you have the flexibility to let it play out, instead of being forced liquid by a closing bell. When it comes to payouts, speed is a clear indicator of integrity. Our window is 1 day. If you request today, you are paid tomorrow. Don't settle for platforms that force you to wait weeks, as those delays are often a business model. Transparency matters. With our model, activation and evaluation fees are refunded once you perform. This ensures that the cost of entry is not a permanent drain on your capital, allowing you to focus entirely on your performance. We provide a full toolbox, not training wheels. With Level 5 options approval, you can utilize long calls and puts, debit and credit spreads, and full multi-leg structures to match the specific needs of your market setups. We offer a direct comparison, side by side, with no marketing spin. It is about understanding the structural differences between traditional futures funding and the options-based approach we provide. Speed is the tell. Firms that prioritize fast payouts are betting on your success, while firms that create unnecessary delays are often hoping you breach your account before they have to process a withdrawal. For a limited time, you can access these accounts at a significant discount. Pay $30, not $100, and remember that these fees are refunded upon performance. Don't miss the window. Trade your way. Whether you scalp 0 DTE contracts on intraday levels, swing weeklies into higher timeframe draws, or utilize complex structure spreads, the entire playbook is finally open to you without the restrictive constraints of traditional firms. We don't offer promises, we offer receipts. See real traders collect payouts on multiple growth accounts in less than 2 weeks. This is public proof of the model working for those who understand the edge. Follow the incentives. When a firm refunds your fees and pays you quickly, your success is their marketing. If a firm keeps every fee and creates payout hurdles, they are betting against you. Choose where your success aligns with the house. Stop trying to scale by adding massive futures contracts that can wipe you out in one bad tick. Scale like an adult by stacking multiple growth accounts, tripling your exposure while maintaining individual, capped risk for each. Act 4. The window. This is a legitimate countdown. The current limited time offer isn't just marketing fluff, it's a genuine opportunity to reset your path with a substantial discount. 70% off. This applies to all accounts for a limited time. Use code HPT to secure your access before the offer expires and the pricing structure changes. Opportunity cost is real. Every reset fee you pay to a failing futures prop is essentially the price of an entire new, discounted options account. You are spending the money anyway. Ensure it goes toward a better trajectory. A tale of two traders. Trader A stays with a restrictive firm, burning through resets and getting 0 payouts. Trader B switches to our options vehicle, gets their first payout in 2 weeks, and actually sleeps through the night. Look at the cumulative spend over 6 months. While one line representing failed resets climbs indefinitely, the other stays flat. One leads to frustration, the other to a funded, profitable career. If you think you only know futures, remember that you actually know the index. The sweeps, the liquidity, and the levels are identical on NDX options. You are just trading the same index with a seatbelt. Options aren't too complicated. You handle the same direction, the same levels, and the same sweep models. The only difference is the ticket includes your maximum risk, so you are never caught off guard. Here is the full stack. 70% off with code HPT, overnight holding, 1-day payouts, refunded activation fees, and full level 5 options access. This is designed to put the infrastructure to work for your strategy. From this video to your first trade in 5 steps. Go to the website, pick your size, use code HPT for your discount, trade your levels, and request your payout. It's that simple. The traders posting those payout certificates aren't smarter than you. They just stopped feeding the broken machine. Use code HPT today to claim your discount before this limited window closes forever. Hollow point trading. Dull entries miss the mark, but our approach expands. Visit optionsfunding.co and use code HPT to get started today.